Welcome to today's video, where we'll be taking you through the complex world of escrow accounts specifically for new construction. As you may know, escrow accounts are essential for ensuring timely payments of your property taxes and homeowners insurance. However, when it comes to new constructions, things can get a bit more complicated. So let's delve into understanding how initial assessments work, what happens during the assessment process, and how to address any potential escrow shortages. Here's what we're going to cover today. First, we'll talk about the initial assessment and how escrow calculations are made. Then, we'll move on to the assessment process itself, followed by ways to manage escrow shortages. We'll also discuss some important considerations and wrap everything up with a conclusion. In any new construction, the initial assessment and escrow calculation are critical steps. Typically, lenders will make an estimate based on land value and other available data to determine your initial escrow payment. This often leads to an adjustment period once the actual tax assessment is conducted by local authorities. Let's pause a moment for a quiz. What is typically included in the initial escrow calculation by lenders for new constructions? Is it only the land value, the value of the completed property, both land and future improvements, or none of the above? Take your time to think about it. We'll discuss the correct answer in the next section. The correct answer is only the land value. Lenders usually estimate property taxes based on the value of the land, since the house hasn't been fully assessed at that stage. As a result, this estimation might lead to future escrow payment adjustments. Now let's talk about the assessment process. Once your new home is complete, a formal assessment will take place to determine its market value. This step is crucial, as it affects your annual property tax calculation, which in turn influences your escrow payment. Addressing escrow shortages in new construction is important to avoid financial difficulties. Initially, your escrow payments might be underestimated because they are based on the land value alone. Following the property's final tax assessment, lenders will adjust your escrow payments to account for these changes. To stay ahead, consider saving a bit each month to cover any potential shortfall. Always keep communication lines open with your lender to discuss these figures and avoid surprises. It's important to consider these key points. First, your initial property tax might be based solely on the previous year's assessment, which includes land value only. Lenders will adjust your escrow payments accordingly to prevent future shortages. It's essential to have open discussions with your lender to ensure everything transitions smoothly. In conclusion, escrow shortages in new construction scenarios are common but usually temporary and manageable. By maintaining open communication with your lender and setting aside funds to address any initial shortfall, you can mitigate the impact of this common issue and ensure the smooth management of your mortgage. Thank you for joining us in understanding the nuances of escrow accounts for new construction homes. If you found this video helpful, feel empowered to like, share, and subscribe. Also, please leave your comments or questions below, and let's continue the conversation. We'd love to hear from you.